30 p.m. right here in Lagos, Nigeria. Coming up on the program, the International Monetary Fund has applauded the CBN's policy on 43 items, allowing importers of all the 43 items previously restricted since 2015 to purchase foreign exchange. FAO report shows natural and man-made disasters have caused $3.8 trillion crop and livestock losses in over 30 years. And oil prices rise over 4% after U.S. tightens sanctions on Russian crude sales. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on the markets now, starting on the African continent. We'll see the NGX marginally up 0.04%. South Africa's indexes down at intraday over 0.5%. You see that big red there for the GSC. And other markets we track in the North Africa there, we'll see close 1.77% for the EGX 30, getting above that 20,000 level, and Kenya closed positive yesterday. And back here, we see in Africa, we see the Securities and Exchange Commission talking about getting the government and private sector to come and get long-term funds in the capital market. That was the declaration by the SEC chair there. He said that the government and private sector should try and come into the capital market to get long-term funding for infrastructure. Take a listen.
Over the past, many years, the SEC has actually been really working with government. We have the annual budget seminar, okay, which we have used really to, encourage and to advise, the government to look to the capital markets to finance, infrastructure projects. You know that we have a very long list of demands that we demand of our government. Okay, we want free education, we want good health care, okay, we want the government to provide good sanitation, we want government to do a lot of things, for us. There is the issue of security, there's the issue of foreign policy, okay. Infrastructure still needs to be financed. Now, government can use the capital markets to access the funding to finance infrastructure. Government can also use the private sector to enter into public-private partnerships, to really deliver infrastructure projects.
Let's go over to the Middle East now, where markets were negative in the UAE at intraday. We see Abu Dhabi index down massive 1.14%. Dubai, a bigger move downward at 2.27%. Elsewhere in the Middle East markets, we track the Saudi Arabia and Qatari index both close in positive region. With Qatari index, biggest mover there, almost 1% gain. Let's take it to Europe now. See, European airlines are finding themselves in a tough spot over safety risk of flights coming and going to Israel. Evacuation operations are ongoing, and airlines are calculating risk and looking at their insurance plans from the perspective of these companies. The risk is quite high. For more now, joining me is Wada Imran from Deutsche Welle in Berlin. Great to have you, Wada. So tell us, which European airlines are in a tricky spot?
Thanks for having me. Well, airlines like Dutch KLM, Air France, Norwegian Air, these are some of the names wrestling with security risks and are having to comb through their insurance policies. There's a lot of concern over the flights to Israel at the moment because of how fast things are progressing and developing in the Middle East. It makes airlines very nervous about going to the region. Norwegian Air, for example, said that an insurance company they use no longer is covering flights to Tel Aviv, but that they had managed to charter one flight in cooperation with Norway's government. Insurers are telling air carriers that they have to review their policies and take risks accordingly. Now, let's take Germany's Lufthansa. The airline is carrying out evacuation flights, but have cancelled all other flights coming in and going to Tel Aviv. And the Lufthansa group is big. It has Swiss, Austrian, and Brussels airlines in it as well. Safety is the top priority of the Lufthansa Airlines. That's what the company said.
And talking about safety, what is the role of government in this?
It seems governments have control and can provide relief or can give governmental insurance to airlines doing evacuations. For example, the French Foreign Ministry is chartering flights via Air France. Other governments have been issuing statements or advice without having a straight policy, though. Another example is of the US, where they're planning to offer charter flights to Europe to help Americans leave Israel. But United Airlines, American Airlines, and Delta Airlines have halted all direct flights to Israel themselves. So I think governments can really have a strong influence on how far airlines can go in times of crisis. And I think for the US government, for example, the main aim is to get their citizens back to the US. For Europe, it isn't so simple as that, and there are maybe mixed messages. European budget airline Ryanair said governments have a lot to do with how this goes forward.
All right, let's get a check on the markets. How are the markets in Europe looking?
Well, investors in Europe are paying close attention to the Polish election. A lot is banking on that in terms of asset value and market stability here. Over the world, stocks are not having a great day. There's pessimism over China's trading data, which did not look as good as some analysts and market watchers had hoped. The S&P 500 fell 0.6%. The Shanghai Composite fell. The Euro Stoxx 50 also fell. So overall, a bit bleak. The MSCI's All Country World Index saw some Asian benchmark indexes in red.
All right, thank you so much. That was Wada there giving us the details from Berlin. Thank you. All right, we see stock futures were slightly lower and early trade today as traders pour through major bank earnings. You see the futures tied to the S&P 500 nudged 0.1% lower, while the Dow Jones Industrial Average, you see there, it's all red. No, that's for Asia, but for the U.S. Markets now, we see NASDAQ 100 lost about 0.38% right there, and we see that J.P. Morgan Chase and Wells Fargo, they kicked off their profit and revenue earnings season there with expectation of the company topped profit and revenue expectations. Wells Fargo rose 2.3% in the pre-market. Well, let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market fell on Thursday, breaking a four-day winning streak. The Dow Jones was down at 0.5%, the S&P 500 down at 0.6%, and the heavy tech NASDAQ also down at 0.6%. Investors are also watching to see what will happen in the days and weeks ahead, as it is also clear that the Consumer Price Index report has showed that the inflation is on the rise and continue to increase over the next few days. We could see this having an impact on the U.S. economy, as inflation reports show a 3.7% increase since last September. Investors are watching to see what could happen with interest rate hikes, as the Federal Reserve could see hikes before the end of the year.
All right, let's get a check on Asia markets. Now, we see Hong Kong's stocks fell about 2%, leading losses in the wider Asia-Pacific markets, and investors digesting China's inflation and trade data for September. So you see the color behind me there. It's all red for the Asia market, 0.55% down for the Nikkei. The Kospi index is 0.95% down, 2,456 points. The HSI index is 2.33% down to close. And we see Shanghai Composite 0.64% down, and the ASX 200 in Australia also down 0.56%. And moving away from those markets now, the International Monetary Fund has once again applauded the policy direction of the Nigerian government. And this is in reaction to the decision of the Central Bank of Nigeria to allow importers of all the 43 items previously restricted since 2015 to purchase foreign exchange in the Nigerian foreign exchange market. The director of the African Department, the IMF, Mr. Abebe Emerald Selassie, was briefing during the Regional Economic Outlook and the IMF World Bank annual meetings going on in Marrakesh, Morocco, reiterates the fund's stance on non-restricted trade policies, but adds that the reforms in Nigeria has to be wholesome if it's going to be impactful.
Our view has always been in Nigeria and many other cases. You know, our economies now are so sophisticated, so complex. I don't think that these kind of restrictions work. The best way to manage modern economies for government authorities that have fiscal policy, monetary policy lever, is to try and use those to affect the kind of outcomes you have, rather than going in and saying, I don't like this tool, so I don't want it to come in, etc. That tends to create unhelpful distortion. Of course, we have tax policy that you could also use, if you really want to lead against certain types of imports, etc. But in general, I think the direction that the CBN has moved in, I think, is helpful. At the same time, this is a country with incredible potential. And we have seen reforms moving in the right direction in recent months. What is needed, we feel, is making the reforms holistic and help reinforce each other. Just as things are were not reinforcing each other in the past. I think there is scope to make the reforms reinforce each other. So, the exchange rate reforms that the government did was very, very welcome, trying to unify the rate. Similarly, the fuel subsidy, but that will not help and will not stick unless you also are tightening monetary policy, unless you also do something to mobilize with tax revenues. So a holistic package of reforms is what's needed.
I'm going to other conversations also coming out from Marrakesh earlier in the week. We see the World Bank president actually spoke about intra-Africa trade. It says Africa cannot develop by relying on loans from international financial institutions. And that was his perspective there. It says that Africa, if growth is going to be real, we have to focus on pushing intra-Africa trade. Take a listen.
It is correct that close to half of our volume of lending goes into the African continent. It is also correct that this is after 50 years, I believe, that the annual meetings are being held on the soil of Africa. My belief is that the level of growth of population in Africa over the coming years and the opportunities that Africa represents, therefore, for world growth are second to none. The question really is, how do we surmount the unbelievable challenges that exist on the ground in Africa to enable that to become something? And that includes everything from very simple things that people outside don't understand, but those of you who live here do. The ability to transport goods across African borders within Africa is unbelievably complicated. It is cheaper to take something from an African country to a completely distant offshore port to bring it back to an African country than it is to move that produce or that product from one African country to the other across their own borders on the continent. That has everything to do with logistics, but also to do with the simplicity of documentation across borders. There's so much work to be done on that. There's the African Free Trade Commission that the bank is an active supporter of. I've said this to African finance ministers. I believe this topic deserves much more attention. You cannot solve it for the continent as a whole, but you can solve it by starting by smaller regions in the continent, looking at how you can promote intra-regional trade in Africa. Just one example, to create jobs for young people. There are other issues to do from the basics of education and healthcare, including skilling institutes as the children grow, so they get a chance to be skilled appropriately for the kind of jobs that could be created in that country.
Looking at African currencies now, for African currencies to strengthen, African countries must produce more to promote intra-Africa trade. And that's the view of Mr. Adebayo, Delegate CEO, Supply Chain Africa. I made the comments on our show Business Morning. Take a listen.
Actually, before we even use currency, before what we now call Naira, dollar came to be, we've always traded values. And has always been the what value, the value for value. And I think, I believe that can strengthen, in a massive way. But one thing underpins anything, any trade, is what value are you bringing? And in the African country perspective is the fact that we're not producing enough. We have to produce. We have to produce enough to trade with, and that's what. And for that to happen, there's a lot of infrastructural build within the countries that needs to happen to be able to produce more. So if you don't produce, then what are you going to be able to trade with? And that's the bottom line of it all. So, and you can't have one without having the other. It's like chicken or egg, which one comes first. So we have to build up, infrastructure within our countries to be able to produce more. And I think there are owners in every country that whatever resources within your means to be able to build the best of their ability. If your textile is what you do best, invest in it and trade with it. And I think if we can actually do that across Africa, I think we're up to something great. But everyone is still just posing all around the place and, kind of in a way that is quite unstable for us. So we have to make sure that we continue to kind of facilitate those infrastructures to be able to move those and produce more. Now, we in Nigeria, we have infrastructure to produce a lot of product, and we haven't capitalized on it. It's either oil, it's agricultural product. Agricultural sector is supposed to be the biggest sector that's supposed to benefit from this intra-Africa trade. But yet, we've not been able to facilitate it because our agri sector is suffering a lot.
So that's the bottom line there is to promote intra-Africa trade. Africa must produce more so that Africans can trade with Africans. We'll take a break now. When we come back, more stories on the African continent. Do stay with us. Welcome back. Let's get a check on the global commodities market now. See, oil prices jumped really high this afternoon. There we see Brent crude futures traded up about 4% at $89.46 a barrel, while the front month November U.S. WTI crude futures also rose 4.2% to trade at $86.38. A lot of volatility right there. And we see gold prices rose about 1% to $1,886 per ounce, adding about 0.9% to $1,899. To get a sense of the weekly summary of these markets and what to expect, going into next week. Joining me now is Wachira Kariuki, Head Training and Research, Windsor Brokers, joining me from Nairobi. Great to have you on the show. Good afternoon from Nigeria.
Afternoon to you, Mr. Ladi. Such
Fantastic.
a pleasure.
I think I was still trapped in the morning earlier, but quite a week for commodities. How do you see, trading this week? It's been quite bullish, but still looks choppy.
Yeah, it has been extremely choppy from Monday, but in some strange circumstances, like you just say, the global markets have turned quite a bit. Oil has picked up in the last 2 to 3 hours over 150 pips. So we think it's an end of week purchasing. And of course, people are also cutting their sales and they're starting to enter buy. And I strongly suspect the bullish market of the oil market will continue for the next maybe 1.5 weeks. Remember, we are starting a new quarter. This is the last week of the first month in the last quarter. So people are shoring up their reserves to kick in for next year. So the price, I suspect, is going to be quite bullish for a while.
And talking about bullish, most investors are looking at that $100 mark, for oil.
Correct.
Do you think that's going to hit soon in the short term?
Absolutely. Yeah, absolutely. We are already, as at now, we are at $86.81 per barrel, which means we are only $14 short. And in the last 4 hours, we've traded close to 200 pips. So $100 barrel is a psychological mark, obviously, and it's always been a very strong benchmark to check and assess, and I suspect we're going to hit it in the next 1 to 2 weeks maximum. Yeah, depending on how the Saudi government, of course, handles this particular crisis. As you may or may not know, the Saudi government met with the Iran government to discuss the Hamas-Israeli crisis, so we want to see how that's going to affect oil as a commodity.
And talking about that $100 mark, how do you think this is going to impact, African economies? Because right now, we're already feeling the pressure at the pumps buying fuel.
Yeah, we are. Yeah, it's crazy. Especially African countries take a larger than usual punch when oil prices increase, because oil is a very strong determinant of the standard of living for most countries. If oil increases, then generally every product downstream gets affected price-wise. So governments will have to come up with intelligent ways, create more reserves, allocate more capital towards that particular purchase, or just go the Nigerian way, create subsidies and subsidize the price of oil, and at least protect and buffer the average citizen from the price change. We already have enough problems as it were, and we cannot afford to have worse economic chaos brought by the price of oil, because fundamentally speaking, and from our technical assessment, the price is only going to get higher. To have moved 200 pips in the last 4 hours is a very strong bullish market on a Friday. We strongly suspect it's going to continue for the next 1 week, sir.
And talking about the Nigerian way, with subsidies, we're struggling to actually afford that, right now. And I'm wondering if you can afford, the Kenyan government can actually afford subsidies at this time.
Well, not really, but you see we have the benefit for the first time, as I mentioned in the last interview. Kenyan government is buying oil in shillings, not in dollars, all right? Which means we can use our reserve currencies and purchase a bit more of oil. So that's a plus. Nonetheless, it doesn't matter, it doesn't change because the quantities are increasing. We're involved in a couple of infrastructure projects. We are involved in a couple of very high-end production, which requires quite a bit of oil. We have a lot more people importing cars. So I don't know how it's going to happen, especially because just last week, the government was trying to borrow more money from the citizen by offering up to 15% per interest rate, and people are not giving in. Most commercial banks started pegging their demand at 18%. So they're saying, you must give me 18% for me to give you how much you're asking for. And for the first time, the central bank did not receive how much they wanted. They wanted to receive upwards of 35 billion. They only got 12 billion, right? Which is a problem. So where is the government going to get this money from if the citizens and the commercial banks are not willing to lend them? So we'll probably have to borrow a lot more money internationally, maybe float an international bond, another euro bond, and find intelligent ways to cut costs and at least show up our reserve on dollars to be able to afford the oil, because it's going to cost more for the same liter on liter.
I guess investors are trying to beat a lot of macro issues now, from inflation to currency devaluation and all of that. Talk to me about gold now, the safe haven asset. Look, it did pretty well this week. It's looking like the best week in a long time.
Correct. Gold has hit the new high of $3,023 per ounce. So gold is a fantastic reserve. Speculators have been buying it quite a bit. Traders have been holding their buys for quite a bit. It's been a fantastic week for traders who traded on oil, on gold, because it's been a very clear bullish run. There was literally no need to speculate on or sell. So the micro of it is that traders are making good money. The macro of it is that means more people are running from currencies and liquidity to go to park their money in gold as a reserve, as you can imagine. So worldwide, it means there is a bit more crisis. The war in the Hamas-Israeli war escalation has not made things better. All right. And of course, last but not least, it's so crazy that even when the U.S. started offering higher returns on their bonds, for the first time, the U.S. market hit almost shy of 5%. The 10-year bond was offered at just about 4.6, 4.7%, which is the highest return the government has ever been willing to pay the citizens. And still, gold is still rising. It means worldwide, on a global level, everyone is looking for reserves, protection, and some sense of security, because there's too much happening. And I suspect this will run to the end of the year. Then we see how the next quarter in the new year begins. But yes, gold has hit an all-time high. And it's not just a high, but how quickly to hit that high. That entire surge happened in not more than 20 days. If you look at your daily outlook. So yeah, everyone is clearly looking for risk aversion and looking for safety and security for their finances, commercial banks and individuals at large.
Risk off at this point. Before I let you go now, I see the Nairobi Securities Exchange has been ranked the worst performing bourse in Africa. Why is that? About 9 months this year in dollar terms.
Yes. Our stock exchange was the third worst around January. Then it became the second worst performing bourse around June, and now we are literally the worst index, the worst stock exchange in terms of performance. And the reason is simple. There's a lot of money that is taking flight from the stock exchange back to the US because there are alternative investments on that particular end. Number two, there's a bit of speculation that the government has borrowed too much and we might not be able to fulfill our debt obligations regarding our bonds. Number three is that the dividend season is over. Once the dividend season is over, that means you're just holding your share purely for capital gain. And in this case, you need to have confidence in the companies and confidence in the operations and confidence that they'll be able to make a profit. And since every aspect of the economy is looking down, remember, we've hit the all-time high of 148.28, exchanging for the shilling to the dollar, which means the currency is weakening, which means the economy is weakening, which means the countries in those economies are not going to do better. And for example, if you look at the biggest share on the Nairobi Stock Exchange, which is Safaricom, it has lost 36% of its value, to now be trading at a low of 14 shillings and 70 cents.
Right.
So if the largest stock on the stock exchange is doing badly, then probably you have no business holding that stock or being in that country. You'd rather just withdraw your money, which is what has happened. And the Nairobi Stock Exchange is now rated as the worst performing in Africa. Maybe by next year, things will turn up and things will get better. But for now, we are holding tight.
Holding tight. Thank you so much. Always great having your perspective. Wachira Kariuki, Head Training and Research, Windsor Brokers in Kenya. Thank you so much.
Thank you. Most appreciated. Thank you, Ladi. Have a good one.
You too. We see natural and man-made disasters, of course, $3.8 trillion in crop and livestock losses over 30 years, and that's according to the FAO. Its report, this is the first time the UN bodies tried to compile such an estimate with the aim of putting into context the scale of the cost of disasters on both global and personal scale. And that's the show today. Thank you so much for watching. It was great having it with you all through the week. Don't forget to join us again next week, and we'll have Business Corporate and Business Morning. You can watch this again on our YouTube channel. Flip over to YouTube, search for Channels Television. You can watch all our productions. Thank you for watching. Have a pleasant weekend. Bye for now.